Now that we have our income statement constructed and we discussed how we're going to fund the business, we need to complete the statement of retained earnings and the cash flow statement. The statement of retained earnings summarizes the initial owner's investment in the company and any income retained within the business or losses the company has sustained. It's cumulative since inception. It provides insight into the profitability of the business and the owner's attitude towards running the business. Is the owner leaving money in the business for growth or stripping money out of the business to benefit the owners? Here's my statement of retained earnings from my coffee house. From our last discussion on how I'm going to fund my business, remember I said I'm going to contribute $180,000 to this business from my personal savings. That's where my retained earnings start. This is my beginning initial contribution from the owner. Then the next line is I'm adding the net income from my income statement. This is the same number from my income statement bottom line. Remember, it was a loss in the first month, $165,454 loss. Then is a line for adding capital. I'm not anticipating having to add more money into this business because I set up that contingency fund in the very first month. So I think my business will have enough money to sustain itself without further cash infusions from me. Remember also I said that part of my skin in the game was I was going to defer my salary. So that is why the less owner salary line is blank. I am not anticipating on pulling any money out of this business. The last line is my retained earnings, which takes beginning retained earnings, adds net income, adds any additional capital from the owner, subtracts any of the money pulled out by the owner, and the ending retained earnings becomes the next month's beginning retained earnings. And we add in the net income, all the other items to get month 2 ending retained earnings, which becomes month 3's beginning retained earnings, and the process repeats itself all the way to the end so that you can see at the end of month 12, there's $138,624 retained in the business. Now, I contributed $180,000, and all that's left after month 12 is $138,000. That's because of this huge initial investment and all the equipment and startup costs that I had. But you can see I am replenishing that retained earnings, and it's going towards my $180,000. But it's going to take at least another year or two to get back up to that $180,000 initial investment. If you see the owner taking a salary and drawing out, that means they're not leaving money within the business to fund future expansion. Now that's fine if there's enough cash to pay the owner's salary. But if you see them pulling out more money than the business is making, they're stripping out cash, and they're not leaving it in there for long-term growth. Next is the statement of cash flows. This shows the business's cash inflows and outflows for operating activities. These are the day-to-day standard operations. Investing activity, buying and selling company assets. Financing activities, this is loan activities and payments to and from owners. It's useful in analyzing cash for potential growth or burn down rates. Growth potential we're talking about, does the business have enough cash reserves to finance expanding operations? And burn down rates talk about how quickly is the business running out of money or burning through cash. Here's my cash flow statement from my coffee house. You can see the 3 sections: the operating activities, investing activities, and financing activities. Operating activities is just my day-to-day income. It's my coffee sales and my baked goods sales. That's the cash I've received from my customers. And remember, my sales were consistent over all 12 months. These are the operating expenses, Notice I do not have those startup costs in here. Those are not the recurring operating activities. They were one-time only things done in the investing in my business in the very beginning. Remember, I said I'm bootstrapping this entirely, so I don't have any business loans, so therefore there's nothing paid in interest. And also recall, I had a net loss for the whole entire year of roughly $44,000. That was that amount in the far right. In the yearly net income, it was in red, negative $44,000. So if I'm operating a loss, I don't have any income tax because I have no income for which the government can tax me on. That's why income taxes is zero. So each month, my business is producing $10,598 in cash just from operations. Here in my investing section, that's the purchase of the property, plant, and equipment. That came off of my startup costs page. So I invested $109,250. Then financing, this is the owner draws and loan payments, neither of which I have because remember I'm foregoing my owner's salary for at least the first 12 months and I didn't take out any loans. So I don't have any income generated or used in financing. So here's my net decrease in cash because remember I took the $180,000, my beginning cash, transferred it from my personal savings into the business, and then I went shopping for all those assets or all those startup costs. At the end of the month, I ended up spending $98,652 more than I made. So my cash at the end of the month one is now only $81,358. That becomes the cash at the beginning of month two. Again, summarizing my operating activities. Again, I don't have any investing or financing activities or the rest of the year. I did that all in the first month. So I only have operations. And operations is adding just over $10,500 each month. So my cash balance is slowly increasing every month by about $11,000. At the end of month 12, I'll have $205,426 in cash. Remember from my funding lecture, I said I was going to not take a salary until cash reserves were equal to 3 months worth of expenses? Well, that's about $200,406. And you can see from my coffee house business, it reaches it in month 12. So I plan on starting to draw an owner's salary in month 13 or the beginning of year 2. I can also see that my salary has to be less than $11,000 a month, or else I'd be pulling too much money out of the business and lowering my contingency reserves below the $200,406 mark. In month 10, I'll start analyzing my statements to see how close actuals were to estimates so that I can start making decisions regarding my salary. Business expansion, maybe I want to increase hours that were open or add staff. Or I might think about increasing my contingency reserves. I will also be starting next year's budget using the same methods I did for the feasibility studies first year. Next week, we'll discuss financial statement analysis. Until then, good luck in constructing your business's 3 financial statements.